Last week was definitely a good week, but not without its major ups and downs. And all eyes were on the Fed. As we said last week, that was going to be the big story, and it definitely was. Jerome Powell gave some comments and was pretty straightforward. So we shall dive into that here. So this is your Market in Minutes report. I'm Mike Minter, Chief Investment Officer with Financial Synergies. And we're looking back on last week, which was the tail end of April through May 3rd. So let's dive into the numbers here. As I said, a good week across the board. You can tell, obviously, with the broader markets, especially really solid. Even had a nice pop from small caps. And obviously, NASDAQ kind of leading the charge. So very tech driven. Wasn't just tech driven, but tech did very well last week. And even foreign developed markets saw a nice return. So that brings us to year-to-date performance. Things are still looking very good here. Small caps finally came out of the dungeon here, so to speak. But across the board, solid returns as we continue on in the second quarter of 2024. So nothing to complain about there. Rates did tick down a little bit last week, which again was nice to see. Haven't seen that in a few weeks. So did get a tick down on all rates here. 30-year Treasury at 4.67, 10 years at 4.52, and 2-year at 4.83. 30-year mortgages as well ticked down. I think they were in the 7.6 something the week before. So we're now at 7.55. Good for the housing market. So overall, the numbers did look really solid last week. So as we said, it was a bit of a roller coaster. So stocks pop, drop, and then rally to end the week. So markets began the week with an upward bump as positive news from some of the mega cap tech companies really stole the show, and they outweighed some disappointing updates from other tech names. The tone quickly changed, unfortunately, on Tuesday as higher than expected Q1 wage growth triggered this inflation and interest rate anxiety. And this is just as the Federal Open Market Committee was going to be kicking off the third meeting of this year. But each of the three major averages dropped about 1.5% on the last trading day of April, so April 30th. When the Fed announced it was holding rates steady on Wednesday, stocks initially rallied on the news, but then sellers kind of got the upper hand late in the trading session, and prices ended the day slightly down. On Thursday, stocks trended higher as more companies reported upbeat Q1 results, and then on Friday, stocks pushed higher after the April jobs report indicated that unemployment had actually ticked up and the economy had slowed. So that was good news for the fight to tame inflation. So kind of up and down, but did end the week very solid. Uncertain Hurtin. So markets obviously hate uncertainty, and I almost say this tongue in cheek because the markets are always uncertain. Nobody has a crystal ball. We don't know what's going to happen, but there are times where things are a little bit maybe more uncertain or choppy than others, and that's where we find ourselves. So Fed Chair Powell attempted to clarify the Fed's stance on the outlook for rates at the close of its two-day meeting. So they met on Wednesday. Tuesday, Wednesday. And so determining what's next for interest rates in the context of this stubborn inflation is just not an easy task. But Powell was as straightforward, I think, as he could probably be at the press conference. He said, I think it's unlikely that the next policy rate will be a hike. He said, so I'd say it's unlikely. So they're not really looking at hiking rates per se. So that's definitely a positive. The question is, when are they going to begin to lower rates? And so that's definitely not going to happen at the next one. Unless something dramatic changes, it's unlikely that's going to happen. So probably what's going to happen is nothing, would be my guess, at the next meeting. So the 175,000 jobs created in April, so this goes back to some of the reports we had last week, represented slower growth than the over 300,000 added in March, and less than the 240,000 economists expected. So this was good news. So some Fed watchers believe that the news bolstered chances that the Fed may actually adjust rates lower sooner rather than later. So that was good news as we headed into the end of the week. So let's take a look at what's on deck for this week. Not a whole lot going on. When we get into next week, there's going to be a lot more news in terms of key economic data, and probably more companies reporting earnings. But this is pretty light. So Wednesday is EIA petroleum report. Thursday is jobless claims, natural gas report, and Fed balance sheet. And Friday is consumer sentiment and Treasury statement. Companies reporting earnings. We have Vertec Pharmaceuticals on Monday. Tuesday is Disney and Arista. And Wednesday, Uber, Airbnb, Shopify, Emerson Electric. Wednesday would be kind of interesting to see those companies reporting earnings. So that rounds out the week, folks. As usual, we'll report back to you next week on what we find this week. In the meantime, here is all our contact information if you wish to get a hold of us for any reason, whether you're a client or not. We'd love to speak with you. And also hit us up on YouTube. Subscribe to the channel if you want to get our videos on a regular basis. We'd love to have you as a regular viewer. And here's some nice disclosures for you, some light reading. Other than that, we will catch up with you next week. Thanks, folks. Appreciate it.